Hello, everybody. Welcome to the last live stream of the year. I hope everybody's doing well today. Have a little look at some of the opportunities around. I mean, not really looking into too many trading opportunities at the moment. So going to have a look at the seasonal heat map, see if there's any kind of opportunity to look at a kind of blend of seasonals and technicals together, see if there's anything that kind of jumps out at us heading into January. May have a little look at some COT reports as well. But yeah, we'll go from there, really. As always, if you have any charts that you're watching, is there anything that you want to go over, let me know in the chat. Hi, Guy. Hope you're doing well. I liked cable longs in here, actually, the other day. And haven't actually managed to get on anything here. There was that US data that dropped. So unemployment claims came in at 205K, sent the dollar downwards. And we've had this kind of push up from cable at the moment. So we did find a little bit of support back down. This is the zone that we were kind of looking at previously, previous kind of swing lows. And yeah, the market's starting to turn here. So could be something to watch out for. Maybe if you get a little bit of a pullback towards that point, could be a sign that the market is going to move back up towards these 4-hour highs. That kind of a sort of flag pattern maybe building there. So we'll see what happens if price does kind of come back for us there. But that was this is again another good example of the price sort of turning here. If we go down to that 15-minute time frame, you can see what we look for is a change of trend. The market had a high here. We hadn't seen a change in trend. Again, every time we kind of approached a new high, the market failed until sort of this point here where we breached that high. The market then came back in, retested all this structure. Then the news came out and we've pushed higher there. So if you did manage to kind of jump on anything there, stops below the lows, then you'd be pretty happy right now. A bit aggressive going into data, but we are starting to kind of breach back to the upside here. So we'll see if that can be sustained, because this is the sort of low volume pocket now that we're in here. So if it does sustain within this area, it may push up to the next area of sort of volume, which is all the way up here around about that 2,700. If it doesn't and it kind of fails and breaches back below, then it's probably going to try and come and seek these kind of swing lows again in here. So we'll keep an eye on cable there, because what we don't want to see necessarily, if you want to be long in this market, you don't necessarily want to see it closing back within this volume area, because the market may want to trade to and from sort of the other side of it. Now we've breached it, though, there could be a strong possibility that we do go and seek that kind of level of resistance. But this is a key point. Where we are now is key. We have to see what happens in and around this point. If I go to the 4-hour time frame, you can kind of see that little area here in a little bit more detail. It's kind of just above that wick there, and we closed on it. So not necessarily confirmation yet that we are going to see a move to the upside at all. Quite a lot of the times after a big news event, the market can obviously come back a little bit. So we'll see what happens there, but not going to rush into anything, because it is the last week before the holidays, really, and typically we don't see too much in the way of movements. Ifran, looking at Euro Yen as well for a move to the downside. The current 1 hour candle looks good, but it is quite big. Yeah, let's flick over to Euro Yen then. I did quite like the yen pairs this week. Haven't actually taken anything on yen. The only trades I've had this week were those dollar Swiss trades, and I haven't traded anything apart from those. Yeah, I can see that we've obviously came back into this resistance level towards 158. We've rejected that. and we're starting to see a little bit of a move to the downside. So I can see potentially a move back down towards these lows in here, around about 154.80 and below. That looks like it makes a lot of sense. Let's have a look at that hourly candle. Yeah, I see what you're saying. It's quite a large hourly candle. I do quite like the fact, though, that you've had sort of lower highs, lower lows, and then recently we've kind of breached through that low there. Could be a sign of continuation. Definitely these points would be of interest in that case. So I do quite like that. These lows in here would be an interesting target area. Depends on sort of how you see this market going. I mean, looking at the daily chart there, we're below previous day's low. We rejected 158. Kind of look at it as where's the natural place for price to go to find support. Back towards these lows here makes a lot of sense there. So if you are looking at that, then there could be something. You might want to just wait to see if you get a kind of different kind of reaction. So if I look at this sort of 5-minute time frame here, I can see that price has kind of hugged to the 200 MA. And, you know, if that continues to sort of flow down, you might want to wait to see if price can kind of come back up a little bit, reject in and around these highs. It just gives you a better risk reward ratio. Also allows you to put your stop loss in a little bit of a better place. So you might be able to put your stop loss above there, for instance, instead of having to have it where you've kind of got in short here, stop loss above those highs. Stops in a little bit more of a vulnerable position at that point. So, you know, I do like the idea of the fact that we've had a consolidation, price has broken the consolidation. You know, that's a good sign that there is a potential for the market to move lower. It's just sometimes it's, you know, I like to look at it as where am I going to best sort of get that risk reward ratio? Where's my stop and risk going to be the safest? If I was to short now, let's say on that hourly close, your stop loss goes here. You opening the door up to a potential retest of this area before the continuation. That happens so much in trading, where there's sort of a saying, isn't there, that once I get in the move, you know, it turns and then it decides to hit my stop loss and go the other way. And that's just because a lot of the times, you know, it's just about where that stop management is placed. I think the safest stop is about here, 157.20, maybe even just above that. So to boost my risk reward ratio, I'd like to just see it come up back towards these swing highs again. If it was in normal market conditions, of course, as well. We're not in normal market conditions, but yeah, I can definitely see a retest here. Absolutely. Let's bring on some seasonal heat maps then. So I wanted to go have a little look at some seasonal charts today because we are obviously heading into the end of the year. I want to set myself up for January. I don't usually do this analysis so early. I usually do this kind of start of Jan, just to kind of see what's going on. So what we're looking at here really on the seasonal heat map is the either really dark red areas or the really green areas. Okay, can you see that okay? Let me know if you can see that okay. I can try and zoom in one more. Let me see if I can put it on a screen. That looks a little bit better. So this is the seasonal heat map. Don't really trade live lean hogs and live cattle, so I will bring this up here. But yeah, like I said, what I want to do is try and identify areas where we can possibly look at some downside. So I can see the Canadian dollar here. It says minus 0.79 and it's in a sort of fairly dark red. We can see the euro is minus 0.66, so that could be something. See, the Japanese yen is in a bit of a sort of greener area. You can see actually the Japanese yen in December can perform pretty well, which kind of flows into January. But once February comes around, there's a very good seasonal bearishness for February for the Japanese yen. So that may coincide with kind of the situation that we're seeing in the markets at the moment. I think the yen is getting stronger. So there is potential to have a little look at sort of, if we're going to create a bit of a strong and weak column out of this. Let me just move that so you can actually see that a little bit better. I'll do it over, just looking at the screen. Right. Strong currencies, weak. Okay. And this is seasonal. Okay. So what I like to do is kind of blend the seasonal analysis with technicals as well as the sort of currency strength meter, you know, because what I like to see, if you get something that agrees with each other, then there's more confluence potentially in that market to have a little look at something going on. So I can see that the Canadian dollar and the euro could be weaker currencies. So if I put CAD and euro here for now, and then the Japanese yen can be put in the stronger currencies for January. Let's have a little look more, again, just kind of looking for the bright green and whatnot. So I can see 5-year US T-notes can be quite strong. That could feed into a little bit of dollar strength as well. But obviously we don't really trade those at the minute. So nothing there. Gold, bright green, gold and silver maybe. Could be ones to watch going into the new year. Obviously, we kind of expect that anyway, don't we? We've been talking about a little bit of gold upside. So gold could be something strong to look for in January. What's interesting to me, though, is we've got palladium and platinum down here as well. So palladium and platinum going on there. So there's a few seasonal opportunities around in January that we can really kind of take note of. Let me just actually make a quick note on those. I'm just going to get a notepad up and then we can have a little look at this. So I can just say seasonal analysis for January. Strong yen, gold, palladium, platinum, and then we can come over and do a weak column and do CAD and euro. Now euro's been fairly weak anyway, so that can be something that we can look into. So that kind of feeds into euro yen narrative a little bit there, Ifran. So that's something that we could look at again in a little bit more of a deeper level now, considering the fact that there could be some seasonal plays in here. Let's have a little look at the monthly chart. I mean, nice bearish month coming into December. We are finding support down towards these wicks, though. That sort of October low, 154.39. We are finding a little bit of support there. And this is all going to depend, I think, as well on sort of what happens globally with the yen, of course. You know, the Bank of Japan aren't really doing anything with rates just yet, but they have obviously talked about it. They need to see some more progression in terms of wages and things like that in order for them to really kind of consider coming out of negative rates. I don't necessarily think that they're going to do that anytime soon. They haven't really ever acted aggressively in the past, so I don't think they're going to start acting aggressively now. What was quite interesting, though, was we did actually talk about this level a while ago on the volume profile. So we can see here, if you use volume profile in your trade, and then if you go on the monthly chart on euro yen and you do a range between November 06 to September 08, there's a sort of a large consolidation that formed in and around this area here. And the market, obviously, then we had the 2008 crash, obviously, which caused that yen strength. And I basically put a fixed range over here, and there was a level at sort of 162.36, which may not be something or may be something. What's what I find quite interesting about that is the fact that look at how the market has reacted from a monthly position to that. We've breached that level, come back below it, closed below, and now we're starting to see a negative reaction there. I'm not saying we're going to see that. I don't think we are going to see that big move there. But it's interesting to see the fact that there was this large consolidation. That was the most traded level within that consolidation, and the market has started to react around that level. If I go to the daily, obviously we've breached that level anyway, but it was quite interesting to see that the market did react from that monthly point of view. So if we're going to expect a little bit more downside, maybe from a seasonal point of view, then it's a good thing to just kind of watch our highs and lows and watch those key structure points. So obviously this area down here towards 154 is going to be pretty important. This low in here would be what interests me the most, because we've obviously, this was a catalyst that caused the market to sort of rally. What was that? 1,278 pips. So that's a significant move in the market. So there's obviously a huge sort of area down here which could be tested if the price was to kind of continue to move lower. So what I would like to sort of do is, look for those key highs and lows to work with. I'm going to get rid of this level for a second, and I'm going to get rid of this level, because I quite like the idea of potentially seeing price come back to 158. And then if we reject 158, then that could be a good level to watch, because essentially if the market is, let's say, we're in that sort of downward period at the moment. Let me just change the color of that. The market's making lower lows and lower highs. If the market's going to continue higher, it's going to make higher highs and higher lows. At the moment, we don't see that just yet. So if the price came into this level of 158 and rejected it, then there is sort of a strong possibility that the market is going to come and test a low point, which could be this low down here, or that big zone of support around about the 152 handle. So I definitely think that there could be something here to look out for. If we again think of it in terms of sort of central banks, although the Bank of Japan haven't acted, there is a lot of speculation that it could potentially happen, and the market can move a lot on speculation. We've seen with the euro most recently that the ECB are talking about potentially cutting interest rates. They've tried to play down that a little bit recently, but they could be one of the first central banks to do that in 2024, potentially, and that could cause some further weakness. So I like the idea of potentially looking at euro yen. Again, I like looking at sort of highs where sellers have come in the past. So for me, this 158 zone makes a lot of sense to see a potential opportunity on euro yen. So keep an eye on euro yen, keep it on the watch list. It could be one to watch going into the future, whether we do get that kind of push up to that level. Let's go on to something else then. So CAD yen could be one to watch as well going into next year if we do get that sort of seasonal play. Now, from a weekly perspective, we are kind of in a sort of minor trading range between sort of 110s, 104 spot 50s. Came up to last week's high. Let me just zoom in. We came up into last week's high, rejected that so far. So it'd be interesting to see if price can kind of try and retest that, or whether we're going to see another move back down towards this 104 spot 50. But if we want to be bearish this market, and the market is in a range, I only want to be bearish from the highs, okay? I don't want to start getting short here. Again, you've got to think of it in terms of risk reward. Where's our stop losses going to be? Where's the reward in putting that risk on right now? And I don't see it here. If price was back up at this level here, then I like the idea of getting short stops above sort of 111.50, and then we've got at least all the way down to 104.50 as targets, and it's a bonus then if it breaches and goes in the sort of seasonal direction towards the 101. So although we are sort of looking at this in more of a bearish sense, we are at range lows now, potentially coming back to range highs. So it could still push back towards the 110 spot 30 handle. Hopefully that makes sense so far. Again, I was kind of looking at CAD yen recently, and I did quite like this sort of 108 level. You can see very strong level of resistance here. The market dropped all the way back down into the swing lows, found support, we came back in. So I thought it might have been a good idea to look for the short here, down towards this low in the short term. But for me now, like I said, if I'm going to be short, I want to be short from highs. So I always kind of look at areas where those sellers have kind of took an interest in the market and pushed price down. And, are those sellers going to react again? Or are the buyers that are buying up to these points seeing these as good areas to take profits and take the money off the table, essentially? So that's another way to kind of think about it. But yeah, I like the idea of potentially seeing price back up towards range highs. That would make a lot more sense to me in terms of risk reward ratio. If we did breach 104.50 though, then so the next level is that sort of 101s. Beyond that is down towards the 95. So if we do see that significant strength in the yen coming in next year, that could be something as well to have a little look at potentially in the future. So CAD yen, euro yen, we've kind of covered now. Let's go have a quick flick over to gold. I haven't actually looked at gold for the past few days. It hasn't really done too much above that level. And this was a level we actually spoke about a couple of weeks ago, I think, to be honest. We were kind of just finding resistance back at this 2038 area. We did initially breach the support at 2028.75, and we kind of traded below it. At that point, I actually thought that there was a good chance to see price kind of fill this area and potentially move higher. But we didn't have that. Price came back within that sort of area, and we've just kind of gone sideways. There's not really anything to sort of go over here on sort of gold, I guess. I mean, if price was to breach and then we head up towards that 2075 again, that'd be something of interest. Kind of got a pattern here where we've had an aggressive move higher. The market's not necessarily making any higher highs, but it's making higher lows. And that could be a sign that, the buyers are interested in those sort of short-term drops at the moment. So that could be a good sign that gold is going to break higher. Like I said, though, I like to look at areas of lows to get involved in the market, and 2018 looks pretty good. I would be concerned though if price did kind of breach this kind of area here. So it does look like a little bit of a sort of consolidation and a breakout. Ifran, oil is another good market that is good to short side. That resembles with cash shorts as well. Yeah, absolutely. I do like the idea of oil shorts. Let's have a quick flick over to oil. Well, I was looking at this area initially, and then price came up into this 70 sort of 4 handle again. This was a big level that we pointed out. We have had sort of, I guess, like a head and shoulders pattern there with the left shoulder, head, right shoulder, kind of breached that now. So that could be a sign that there's a good possibility that we're going to see some downside in the oil prices. Daily chart as well, kind of showing a little bit of a bearish pin candle. I like the idea of if price had held above 74.13, I like the idea of price moving towards 77.70 and then look for the potential short. So we'll see what happens. Like I said, I don't really like trading this time of year because of the low volumes and whatnot. So I'm trying not to get involved really at the moment. But we can see here, look at these sort of supporting lows. We came into these weekly lows. This is where we took profits on our oil shorts. And yeah, the market has kind of pulled back a little bit. But there's no real aggressive buying coming in here, is there? There's no like momentum behind the move. We're not getting sort of candlesticks that are, closing towards the top of the wicks or anything like that just yet. We'll have to see how this week pans out. There is still a little bit of data to come, isn't there? So we've got, we had unemployment claims, obviously, final GDP as well, which kind of added a little bit to that downside pressure. Tomorrow, we've got the core PCE price index as well. So CAD GDP as well. Be interested to see how the CAD GDP comes out. Obviously, we're talking about potentially a little bit of downside in CAD in January. So we'll see if there is any kind of catalyst behind anything like that. But yeah, like we said at the start of the week, it's going to be a flat trading week, Good afternoon, Vincent. I'm doing really well, thank you. Hope you are good, mate. And Roy Guy, yeah, there's no momentum in the market. Yeah, there's just no volumes at this time of year. It's very difficult trading conditions. And like I said on Tuesday, a lot of people use this as their time to kind of get in tune with the market and try and trade because they've got a little bit of spare time over the holiday period. I think that's the worst thing you can probably do because there's no sort of momentum behind those moves, and the market can move a bit more aggressive on news. And that's kind of what we've seen a little bit of today. Dollars had some bad news, dollars fell, but before that, we didn't really see too much going on. So yeah, very, very difficult trading conditions. I'm kind of happy that I did dollar Swiss trades on Monday, called it quits, you know. So yeah. Other markets then. So it says palladium and platinum. I have not looked at those markets for a while. There was a good time at one point that I used to trade platinum a fair bit. Platinum. Let's look at, should we go futures market? Let's go all. Let's see if there's I guess a CFD of platinum. So platinum, very strong seasonal bullishness in January, and platinum prices are in a decent trading range. You know, this is what I'd be looking for. I'd be looking for price to stick within a range. This is a weekly time frame, so it's a very large trading range. I'd be looking for price to come back down towards this low. If we get anything in and around this area, come sort of you know, I'm not expecting 2 weeks of really strong bearishness, but if we're around this sort of area, we're in January and we usually see a bit of a bullish move, then we could see a move higher. Let's have a look at the daily chart. Yeah, with something like this, with something like a commodity, you want to just really have clear defined areas of support and resistance. A range gives us the opportunity to see that. So yeah, it's not really in a position for me where I want to get involved with that one aggressively. Let's go look at palladium. This might be moving a little bit ahead of time, which could be a little bit more interesting to us. You know, I'm looking at the fact that we get strong seasonals and we've got this bearish trend here. So immediately I kind of look at why is price turned there 94 or 955 is kind of where we've turned at the moment. Look left and I can see that we've obviously had all this kind of support previously in 2018. So maybe the market is having a little bit, I didn't mean to click that. Let's get that off. Let's have a little look. I don't know whether I'll be able to get the fixed range on this, to be honest. It might not work, considering I'm on a weekly chart as well. Yeah, it won't work. I might have to go to a futures chart to have a little look at the volumes there. But that's a strong bullish move. You know, I like the idea of seeing that strong bullish move continue, and the fact that we're kind of breaching sort of trend line resistance as well, multiple trend line resistance. If we're going to look at it as in like, where's the sort of momentum in the market, you can see that we're sort of breaching previous highs as well. So maybe, you know, palladium is one to watch. You know, we can add this to the watch list here. Add palladium to watch list. There we go. Maybe we'll come back to palladium and see if there's anything that's happened, whether we get a few sort of downward days, and then in January, if it can be around these lows, that could be something that we look into for some potential reversals as well, in line with that seasonal pattern. So yeah, keep an eye on that one. I was looking at some other markets as well, obviously Norwegian krona as well, affected by oil prices. So there could be something with the Norwegian krona. Let's have a quick flick over to the S&P 500. Obviously, we have tapped into the area of resistance now. So let's just flick over to the CFD. we came back into this key swing high. My alert actually went off yesterday for 47.75, which was obviously the sort of all-time highs, the highs that formed back at the end of December 21 and start of January 22. And we're back in and around that area. It kind of seems a little bit mad to say in terms of with regard to what's happened in the market recently, the fact that the stock markets are back near all-time highs or even above, including the sort of the Dow in that context and the Nasdaq. We did get a sharp sell-off though. If we go to the 4-hour time frame, if it wants to load up, we have really bad weather here in the UK today. So if the internet doesn't sound so good, I can only apologise. But yeah, we had sort of a big move down yesterday. We're back into sort of these kind of previous 4-hour lows. This was an area we kind of talked about on Tuesday, saying, you know, if price came back in here, wouldn't it be a bad idea to get long? Would I have got long after a move like that? Maybe not. You know, that is quite an aggressive move to the downside. I think it would have took a brave trader to try and maybe buy that up. Not that it was a bad idea to do so. You know, the market is in a strong upward trend. This was an area where you can see below that point would be low volume. So if the market wanted to stay above that point, this is a good area to turn around. So in that sense, then, yeah, that would have been a good area to start looking for the long. That is quite an aggressive move, you know. I think I read somewhere that it's the biggest single drop on the S&P 500 since January 22. I'm pretty sure I read that on Bloomberg. So if that is the case, then that is quite significant in the market. And whether that selling will continue, we'll have to wait and see. But again, if I kind of ask myself the question, where do I want to be a seller? If sellers are getting involved, you know, if price comes back to that area, they're going to want to sell again at that point, if they are involved at that point in terms of aggressive selling. So I wouldn't be interested now unless we got a move back here or a breach of 4,700. A breach of 4,700, I can see us kind of heading down towards the 46.30s, 46.20s. But as long as we stay above that, I think we could see a move back into the highs on the S&P. But yeah, very interesting year this year in terms of sort of what's happened. You know, if we can have a little look at kind of 2023's performance in the stock market, you know, this has been the year in the stock market. It's actually been a fairly positive year for stocks, up 21.8% on the year. You know, that's a pretty good return. Obviously, completely overshadows what happened in 2022 when we were sort of down 23. What were we down actually? Let me grab that from high to low. We'll go high to low. Minus 27.5% down. So completely different sort of picture that we're seeing in the stock market at the moment compared to what happened in 2022. Obviously, lots to kind of unpick there in terms of interest rates and high inflation and stuff like that. So yeah, it's been a very, very interesting time in the markets over the past couple of years. But you know, we'll see if normal sort of services resume. I mean, usually after quite a significant drop in the market, you know, if price takes out the all-time highs, we can get a fairly decent run. So would I be surprised if we trade through these highs and ended up at sort of 6,000 in the future? You know, maybe not, because if we look at it over a sort of monthly period, it sounds insane to say, but you know, look at that. Usually after quite a large drop, once we kind of hold above the highs there, it can continue to move higher. I mean, what's the percentage of that break there? So that's a 35% move. So let's just say, in theory, because all we can do is kind of look at if, buts and maybes here, but a 35% rise would take us way higher, probably into this sort of 6,400 area, which sounds insane to say, you know. But yeah, we'll have to wait and see what happens in that market there. But I'm going to leave it there, guys. I'm going to sign off for the sort of last live stream of the year. Thank you for joining me for this this sort of recent period of live streams and things like that. Thank you for supporting the channel as well. If you are subscribed, I really appreciate that. Thank you to everyone that's commented today, 𝖥𝖣yi, Ifran, Vincent, and yeah, thank you all for being supportive. I really appreciate it, and I hope you have a good holiday season, and I will see you back in January. Okay, so see you guys. Thank you for everything, and I'll speak to you in the new year. Cheers.